What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to share an awesome conversation I just had with my friend Evan from Alta Commercial Capital. He is just a mover and shaker in the commercial lending industry. He's just absolutely crushing it, helping tons of business owners get the capital and funding they need to grow and operate their business. And, I talk a lot about infinite banking on my channel, obviously, and I've been doing content recently about why I think it's just so important right now, especially right now, for business owners to at least consider having an infinite banking policy, specifically talking about financing requirements that most businesses need, because obviously interest rates are a lot higher. That means financing costs are significantly higher. It's also becoming more difficult to get the working capital that business owners need. And that's a lot of what Evan and I talk about in this conversation. But in addition to having the infinite banking policy and stuff, I thought it'd be really beneficial to get him on the channel, somebody that's actually in the trenches in the lending industry, actually helping business owners with these types of things, getting working capital, consolidating different types of capital that might actually not be very good for your business. He's been helping a lot of businesses with SBA loans recently as well. That's one of kind of his new bread and butter. But we also talk about the overall economy, where we think things, where he sees things heading over the next 12 to 18 months, and what you can do as a business owner to make sure that you insulate yourself as much as possible from the ramifications of just all of the economic chaos and uncertainty, but also how to put yourself in a position to always make sure, well, nothing's guaranteed, but to significantly increase your ability to get the capital and funding that you need to build and grow your business. So really, really awesome conversation. I highly recommend you stick to the end. There are some really cool things. I actually learned like 4 or 5 different things that I didn't know about SBA loans, lines of credit, et cetera, from Evan during this conversation. So it's really, really beneficial. So I hope you guys enjoyed. If you have any questions or comments, leave them down in the comment section below. I always love hearing you guys' feedback. And enjoy the conversation. Here we go. All right. Yeah, man, this is it's gonna be a lot of fun. So I've really been looking forward to this conversation because so Evan is so I'm talking to the audience here. Evan is a friend of mine. We've done a little business together in the past in the lending industry. I'm more on the marketing side of the business. He's actually in the trenches, helping business owners get working capital and lines of credit. And you mentioned earlier, Evan, you've been working a lot with SBA loans and stuff like that. And Evan and I have kind of gone back and forth a little bit, just following each other's posts. And he left a comment on one of my posts talking about Republic First Bank going under. And then I saw a post that he made about one of his lenders that he used to work with, I think, going under as well. I was like, all right, we got to get on a call and talk about what is going on in the economy right now. Evan, I thought it'd be perfect for you to get on and talk to my audience a little bit about what you're seeing in the lending industry, because I have a lot of business owners that check out the channel because I talk a lot about infinite banking and stuff like that. And we'll get into that a little bit, but working capital, financing, just having access to funding in your business is so important. And there's so many things that are changing right now, and there's so much chaos and uncertainty around the banking and the banking system, the financial system. And I've seen articles where it's getting more difficult to get the working capital that business owners need. So I thought it'd be really cool to get you on and talk a little bit about what you're experiencing in the industry and stuff like that. So really looking forward to this, and I appreciate you being here.
Yeah, no, thanks for having me on there. I know we've been kind of following each other's Facebook profiles for a little while now, and when we all kind of work with businesses, we all team up and kind of figure out how we can help people. And so I think it's awesome that you brought me on here. So as a quick intro, excuse me. So my name is Evan Aaron Sebia. I'm the owner of Alta Commercial Capital. We're a commercial lending brokerage here in Utah. We do national lending, SBA from top down. We do SBA, working capital equipment. And there's been a lot of uncertainty with business owners, and that is true. And so I was pulling up my CRM, my little system where I can keep track of all my clients, and I was going through, and I had over 3,000 businesses that I've talked to in the last 2 years. Does it mean I talk to them for hours? No, a minute or two, and sometimes an hour. But I was just kind of going through my system, and so I've talked to quite a bit of business owners. So I'm telling you that I've seen a lot of financial reports. I've seen business bank accounts. I've seen credit cards. I've seen everything from top down, like a doctor's office. I've seen it all. So a couple things that has been a little crazy in the industry. Let's kind of talk about SBA. SBA, you don't really hear about it unless you know somebody that works in the industry. I mean, when you pull up Fox or CNN, whatever, they're all the same bird anyway. So whatever you get up on the news anyways, you're not going to hear about what's going on with SBA. There's nobody that talks about it. There's a lot of uncertainty with commercial loan officers at these lending institutions. So a couple of things that, first of all, people should know, SBA does not give you the loan. So I'm just going to do a quick little education on what SBA is.
Sure.
The SBA does not give you the money. They're a government entity, the Small Business Administration. They oversee the rules and regulations regarding the lending side of things with the money that is given to you by private lenders and banks. So you could either be a bank like Wells Fargo or US Bank, or it could be a private money lender. They don't offer credit cards. They don't offer mortgages. These guys just do SBA lending. So there's two verticals of people who will give you money, and that falls under the SBA. The SBA says that you can apply to become a lender. They apply, they get accepted, and they have hedge funds or lots of money, or the bank has deposits. So there's different ways how they get their money that they're able to offer to you. What the SBA does is, if you default on your SBA loan, let's say that you get a $400,000 acquisition loan through the SBA and you go under, someone's going to have to pay for that. So typically it's your collateral. Your money is going to have to pay for, paying that loan back, because you have to collateralize dollar for dollar with the SBA. Now, let's say there's not enough collateral. Well, someone's going to have to pay that back, and that's the taxpayer. So the SBA guarantees banks anywhere from 75 to 85% of that bank or lender will get their money back. So if I gave out $100,000, the SBA says, okay, well, we approved this loan. This is done. If they default, we'll get that money back and pay you back 75 to 85%. That's super low risk, because the reason why they set this up is because banks and private money lenders think, why would we ever want to do small loans? We'll just do $100 billion loans, and we never have to worry about the small guy. So in order to kind of stimulate the economy, the SBA had to get created to offer small lending, but it had to be worth it enough for these lenders to want to do it. And by doing that, they created that mitigation of risk. So That's kind of like a long explanation, and also short, of how SBA works. So with that being said, there's thousands of SBA lenders. You can look them up. You can actually see how many loans were done last year. If you just go to sba.gov, you can actually pull up the report and actually see every single lender that has done an SBA loan. So you can actually see this data. And I can send you that link later. You can share that with your group as well.
Yeah, we can put that in the description.
People can look it up and see for themselves which lenders are out there. So with that being said, just because you're on the SBA doesn't necessarily mean as a lender you're doing well. So for example, we've seen some really as the time of this recording a week ago, we've had Fundex Solutions, which is one of the largest SBA lenders. They went under. I had over a dozen commercial loan officers there that had to go find another job. They basically said, hey, we have to, guys, anything that we have term sheets out right now, which term sheets means we're going to offer you money. We have to go through the process to close. They're going to honor that, but they said no other deals. And they did $133 million in SBA loans last year, which is crazy. I mean, that's a lot of money for SBA. That's a big dog in the SBA market. I think they're in the top 10 of the SBA lenders in the country, and they're an alternative lender. They went out because their money dried up.
What is that? What do you mean the money dried up?
Meaning that the money that they get to lend, let's say that it's a fund, that money is no longer there. They're seeing high defaults. They're seeing investors no longer putting money into the pool. So
Right.
they can't offer that money out, even with an SBA guarantee, even with the lowest rate, pretty
Wow.
much the best terms that you can get. Even then, lenders and people that have money are no longer giving money to that pool. And so there could be, I mean, that's my assumption, just kind of for hearing a couple things and knowing a couple people.
Yeah.
But at the same time, they can't issue out any more money, and so that dried up, and so that created
So,
what.
yeah, real quick, Evan, I want to touch on that really quick. Let's dive into that for a minute, because that's some of what I wanted to talk about in this video is just all the stuff that's going on right now. We were talking before we started recording about how the writing is kind of on the wall a little bit. We're seeing cracks in the armor, so to speak, and I don't think that it's going to be this soft landing that they keep telling us that it's going to be.
Right.
Inflation is sticky at 3.5%, which means interest rates are going to remain higher for much longer, which is going to put even more stress on the system as well. So, you were talking about so the money is dried up. Why do you think that is? Do you think it, like when I hear that, I'm thinking of a couple of different things. Is one, maybe these investors are seeing the writing on the wall as well. Like you mentioned, there's higher defaults as well. So obviously the economy and the market is shifting. Maybe the economy's not doing as good as they'd like us to think, at least from a small business standpoint, right? If we were doing that good, then you would not see high defaults, right? High defaults means things are not doing very well. And then I think on top of that as well, you have, because interest rates are so high and you can get 5.5% in a treasury bill. Well, why take the risk investing in a fund where defaults are high? Why not just put your money with the US government right now, make 5.5% virtually risk-free? That's a whole other conversation, but virtually risk-free, right? Do you what do you think that's a fair assessment? And then is there anything else that you would add? Like, why do you think the funds are drying up there? Why are they not making as many loans?
Well, a couple things. Yeah, let's say for example, I think it all started during COVID, and we're now seeing some of the aftermath of those PPP loans. I'll give you an example. So a lot of businesses took those PPP loans or ERC tax credits, all those products that are available. What ended up happening is those interest rates that they're paying are really high. I have looking at one right now that I'm trying to refinance for somebody. It's going to be really tough to do for them, but they're paying about 24% interest a year
on the PPP loan.
On the PPP,
wow, that's crazy. And I didn't know it was that high.
Yeah, he was paying it, and I'll send you a screenshot. I'll cut out kind of what some of his personal information on there so you can see this. It's pretty nuts. So a lot of these business owners are not able to afford this massive fluctuation of one, their loan, but most importantly is you can pay loans all day, even at 50% interest rate, if you have the business coming in. Sure. So that's another thing. Who cares if you're paying 50%, 20%, 10%, 5%, as long as you have the business coming in through the door? That's another thing. Consumers are spending a lot less money right now. A lot of people are strapped for cash. They're not going out there and spending money. They're not spending as much on gas, on other products. They'd rather have things shipped to them. Let's say they are going to spend. Amazon has completely taken over a lot of things, and so a lot of these businesses, yes, you see a lot of people out there driving around buying things, but also a lot of people are strapped for cash. A lot of business owners cannot hire the right people because people will quit and go to somewhere else that will offer more money. There's also a lot of uncertainty in the economy with our government and what's going to happen there after the election, during the election. So there's a lot of uncertainty, and there's a massive default rate going on right now with loans. I have people calling me every single week saying, you know what, Evan, I got this loan, this SBA loan specifically, when it was 6-7%. Now I'm paying 11.25%, and my monthly payment went over 40%. And it's really difficult for me to pay. And it wasn't a big deal 2 years ago, but now, even 3 years ago, but now I also am seeing 20-30% less business than I was 2 or 3 years ago.
And you're seeing this on a regular basis.
Every day.
I mean, like you said, you've got 3,000 business owners in your CRM that you've talked to over the past a couple of years, and you see the financial reports. You see the 20 to 30% less business coming in.
Oh,
and I didn't know. So these SBA loans, are they usually an adjustable rate?
They are, for the most part.
So the rise in interest rates has impacted those loans, obviously, right?
Absolutely. Yeah.
Oh man, that hurts. That makes.
Typically, it's every quarter on average. They adjust every quarter the rate, and so there's two things that I've seen this the most common where, hey, is there any way we can get a fixed interest rate? And I forgot to mention that I'm also, my company, we're a brokerage, so I have about 40 SBA lenders that I personally work with, and I have about 10 that I probably send most of my business to. And you also have to understand where to place the client. There's a lot of processing to understanding the file that you get. But the point I'm telling you that is that with the files that I am seeing, their rates are so much higher. So, for example, I just got one just this last week. He's trying to refinance. It's actually the same one, the PPP. So he sent me his tax returns, and I always ask for the last 3 years of tax returns so I can take a look at it. And he's on a downtrend. I mean, he was doing about $1 million net, $1 million net 3 years ago. 2 years ago, he went down to 400,000 net.
Wow.
Last year, he's at 111,000 net. So,
and what kind of business was that?
So this one is I can't. Now that you asked me, I can't remember off the top of my head. This is I think it's a steel manufacturing business. And steel is booming. There's a lot of commercial buildings that are needing steel. There's a lot of companies needing, but for them, they're suffering on a lot of their cash flow. So the first thing that the SBA lenders are going to see is the downtrend, and he's already downtrending. And on top of that, his rate is going up, and so it's just not looking for. There's definitely like a massive bottleneck, and that's not everybody, but this is a lot of people.
Sure. You're seeing it more frequently.
Yeah, and it's getting worse. Yeah, it's definitely getting worse for sure.
That's crazy, man. So, all right. So let's talk a little bit about what business owners can do. I'm gonna, I talk a lot about infinite banking and stuff on my channel, and I'm gonna touch on that for a minute, and then I want to get into some specific things that you're doing to help business owners with that. You mentioned that you were trying to help one of them refinance and all that. So, but real quick, guys, I actually did a video on this the other day about like the 5 top reasons that I think just about every business owner, like the top 5 reasons every business owner should have an infinite banking policy set up with a dividend paying whole life insurance policy. And one of those was having a competitive interest rate. Okay, now every life insurance company is a little bit different, and the interest rate can fluctuate on policy loans. So just for those of you that are a little bit newer to this, with a dividend paying whole life insurance policy, we can structure it in a way where it has really high cash value that you have access to within the first 30 days. All right, that's exactly how I set my policy up, and I've been using my policy left and right for all different kinds of things, right? And right now, my policy loan rate is only 5.5%, and it has nothing to do with my income, tax returns. There's no credit check, no application, no approval process, nothing. I literally just tell the life insurance company how much I need, and it's in my account in 2 to 3 business days at a 5.5% interest rate. And, like when you were mentioning people at 24% interest rates, if they had 8 or, 5, 6, 7, 8%, whatever, now it's 11, 12%, like that has a massive impact on cash flow and revenue. And so the financing costs can just sometimes get completely out of control. And so my point of bringing that up is that if you have a policy in place that's funded properly, all right, and you start to experience this type of scenario where financing costs are really, really expensive, one option is to now be able to tap into your policy for your financing needs until things calm down. It's kind of like a volatility buffer in retirement where, if you have your 401k, for example, and you're taking retirement income from it, but the market goes down, well, you don't want to sell off assets for income while the market's down. You're going to make it that much worse. You're going to run out of money a lot faster. So if you have a volatility buffer, like an annuity, reverse mortgage, dividend paying life insurance, whatever, volatility buffer you can tap into for that income while the market comes back, you're going to significantly increase the amount of time that that asset will be able to provide income for you. It's the same thing with financing costs here. Why, as a business owner, I mean, there's so many other benefits that you get too, but like when you were talking about, Evan, the interest rate that people are paying right now, like 24%, hell, even 11% versus 5.5% right now. And it might go up a little bit, but like that's such a huge difference. And why I feel so strongly about business owners having something like this in place, not to mention the death benefit, living benefits, et cetera. But from a financing standpoint, man, it can make a huge difference. So that's one thing that I wanted to share with you guys during this video. Now, Evan, I'd be really curious to hear what you're doing, like when you run into business owners that have these really, really high interest rates that have gone up very significantly over the last 1 or 2 years, whatever. What are some options? Maybe an infinite banking policy is not right for them at the moment. That's fine. But what are you doing that's been working to get? Is it refinancing? Is it something else? Like, what are you doing to help business owners in that situation? What are their options?
Yeah, great question. So this is where I think working with somebody that has multiple products can really help you make it or break it in your business. Because one of the most common scenario that I'm seeing right now is that you go to a bank, and banks are, if you understand insurance, there's captive agencies and there's not captive agencies. Captive agencies can only offer you their products, and non-captive meaning they can offer you many products, and you can do a lot more for the client. It's really similar to my industry when you look at it that way, because banks are captive. They can only offer you so many products, and alternative lenders, they're also captive. But when you have multiple lenders at once, you can offer multiple products to the client to really structure to help them. And I think you understand that too. But for your audience, when you go to the bank and say, let's say you're in town in Texas, Houston, and you see a bank that you love, and you go in there and you walk into the teller and say, hey, I want to talk to your commercial loan officer. I have high credit cards. I have this term loan that I need to pay off, and I want to get an SBA loan. I need to get some equipment. And so they're like, oh, great. That sounds awesome. Let's get you an appointment to the commercial loan officer. You sit down with the commercial loan officer. The commercial loan officer says, hey, let's talk about what you need. You say you need all these products. They say, well, the only thing that we can do for you is a line of credit, a credit card, and maybe an SBA loan. So you're like, okay, that's what they're telling me what to do. I mean, they know, right? So that's what I should do. Right. And then you do that, and you get denied by the line of credit. Maybe you get a $10,000 credit card, and then you got denied by the SBA loan because you didn't have your taxes done, or maybe that bank wasn't the right one, and they're only wanted to do equipment SBA loans or commercial real estate. You didn't realize that they don't like to do working capital. They don't like to do anything under $200,000 either. And so you go to the next bank and you run into the same story 10 times, 10 different banks. You go to alternative lenders and you run into the same thing. And so you really, in this market, banks are really tightening up, and same with alternative lenders. And so it's making it really difficult, kind of like Monopoly, right? You look at the Monopoly board, you got the square, and you have all these little lots that you can go down. You roll the dice, and you play this game. And you're like, man, I just got to keep going until I finally get $200.
Right.
And so, and it's really difficult where, when you work someone that has multiple products, you can just get rid of that board. We can get everything that we need right now. When we roll the dice, there's a higher chance of you getting $200 right here and then.
Sure.
So when it comes to what these business owners are seeing, how we're kind of structuring things for them, first we have to understand. We have a questionnaire, and I have a few questions that I will talk with you and understand what your situation is, what kind of debts you currently have. A lot of business owners right now are taking merchant cash advances, and those are basically SBA killers. SBA lenders don't like to see that you have merchant cash advances. And there's a lot of predatory brokers out there that will sell you on 2 or 3 or 4 merchant cash advances and tell you, oh, no worries, we'll just refinance out of this. And unfortunately, I mean, I just talked to my commercial loan officer 2 weeks ago about this, and he's top 1% in the country, meaning he's doing over 100 million in SBA himself, by himself, in production. So he knows what he's talking about. And as soon as he sees an merchant cash advance, boom, yeah, that's not a deal for us. We can see them being a volatile client. We don't want to take that. It's high risk for us because of the market that we're in right now. And so another thing as well, so I have to understand what kind of products you already have and if you need equipment or anything else like that. So once we kind of figure that out, I would position you to say, okay, well, let's pay off these merchant cash advances. How are we going to do that? Well, let's look at maybe the industry that you're in. If you're a restaurant, maybe we work with your merchant processing. I have connections. You have great connections in that area. Let's get you a little bit of extra capital that way to pay off that merchant cash advance quickly. Then we land you into a better product that's like a line of credit or a term loan that's structured right, because there's a lot of lines of credit that are structured just like merchant cash advances, and they're almost the same thing. And so you have to get the right line of credit that actually looks healthy, and you're able to supplement that payment so we can maybe pay off some debt. And then if we get you some equipment, how is that going to bring you more revenue? Just because you need an excavator and it's going to be sitting there not making you 20 grand a week, then it's not worth getting that thing.
Sure.
So we have to understand what products you need. But then once we have, let's say that you have maybe a couple term loans, equipment, you're paying higher rates. At that point, I will look at your taxes and I'll look at your profit and loss and your balance sheet. And once we have those things, I will then position you to say, okay, this is a great candidate for SBA. And then we will take all those products and refi everything into an SBA loan and maybe add another 50, 100, 200K in working capital on top of that.
Right.
And then we operate through the SBA. And the last thing that I'm going to say as well is that the SBA is fantastic, but this can take, 30 to 60 days, if not, actually, I would say 60 to 90 days these days, 60 to 90 days to close. So we also have to have the proper expectation of are you going to be alive in 60 to 90 days? So we have to really understand your profile to really make sure you can kind of stretch it through here and have also the highest likelihood of closing this loan. And so to kind of put it, I guess, more simply, is we really have to go through and fully understand you from start to finish. And I guess this will be the last thing I'll say. Your financials are the most important thing you need to be taking care of right now for you to get approved for pretty much anything. Please get your bookkeeping done. If you have a bookkeeper that you're working with, get your bookkeeping done. Get your taxes done. Now, at this point, since we're in May, at the time of this recording, we need to have your 2023s done at this point. So get 2023 done. Get the last 2 years before that done. Get your balance sheet updated, your profit and loss updated. Get your bank statements. Make sure that your bank statements are also taken care of, because I've seen a lot of denials strictly off of large fluctuations in cash flow. That's been a very common one that I've seen. Yeah, you're getting 40 grand coming in, but if there's a huge fluctuations of cash flow, that's also a deterrent to a lot of lenders. And so we need to see more even money coming in into your bank accounts. So there's multiple things that you need to do. And this is not meant to sound difficult, but just make sure you're working with the right people that can help you understand these things, so that when you're positioned to apply. The market is crazy right now. We are looking at those type of things. Before last year, even a year and a half ago, it was like, oh yeah, submit it, boom, approved, boom, approved, boom, approved. Right. Now it's like we are looking at things at a more microscope level for everybody. So
so you really got to have your I's dotted, T's crossed, all that stuff.
Absolutely.
Couple of things on that you mentioned with people taking merchant cash advances. I don't know if you have a program that you recommend to people, but I did training on that on my marketing channel. I'll link it down below, where there's a company that does merchant cash advance consolidation, where is it consolidation? Restructuring. Restructuring. Yeah. Where the lender still gets paid full. It reduces monthly payments by like 30 to 50%, and they're basically just restructuring the terms of those merchant cash advances. Because, man, if you don't take care of those things, they can quickly spiral out of control. I've seen people that have 5-6 merchant cash advances stacked on top of each other. From an ethical standpoint, I don't know how people are able to do that and sell that to them, but whatever, it is what it is. And then you were mentioning like, oh, it's not a big, like people will say, oh, it's not a big deal, we'll just refinance out. Yeah, but now the market has shifted and now you can't refinance out. At least it's not nearly as easy as it would have been maybe a year or two ago. And now you're stuck with these ridiculously high interest rate loans that, I mean, it can literally bury you. So guys, make sure you check out the train. I'll link it down in the description. Evan, do you have a resource for that restructures those. So if they
I
were to,
do. Yeah, I have. I know the company you're thinking about right now because I've seen it in the past. After this, I'll send you one that I know is really good that has taken care of my clients. Yeah, restructuring can work really well. There's a lot of restructuring companies out there. Keep that in mind. So I would say there's a couple that are really good, and there's a lot that will
yeah,
really. And you've actually done your homework too. So I think you've had some really good recommendations. And yeah, restructuring. I've seen it help. Like I had one client that was he was like a drywall business, and he took out like $400,000 in merchant cash advances. And at the time, it was awesome because he's doing $4 million a year.
sure,
But his business went down to $1 million a year quickly, and he still had all the staff, and those payments became insane. And so I actually put him through someone that I knew that restructured that for him, and it like basically saved his business.
yeah,
Because I think they saved him like 60%,
yep,
and like it literally saved his business. And
that's
so
crazy.
it can be a great product, and that's actually a good recommendation too. So yeah,
Yeah.
we'll talk about that as well. So
Yeah, for sure. And it's just one option. Maybe that's the right option for you. Maybe it's not. It's just no. This is what I talk about on my channel all the time: is knowing what your options are that to best reach your goals. I talk a lot about infinite banking and stuff, and there's certain products out there that I'm not a fan of whatsoever. But at the end of the day, it comes down to your goals, your situation. What are you trying to accomplish here? What's in alignment with your core values, your principles? Just overall picture? What are we trying to accomplish, and what are my options to help me get there? And then how do those options work? Right? You have to know how these various different options work. And I just immediately thought the example you just gave, he's making $4 million a year, $400,000 in merchant cash advance, not a big deal. But I'm just if he had just taken some of that, put it into a policy, fund it properly. And, he could have eventually maybe used the policy to consolidate all of his merchant cash advances. He wouldn't have gotten into the trouble that he was in or whatnot. And he would have had this awesome asset, this vehicle over here to help him with his business, with the fluctuations that we naturally experience in business.
I'm going to say something real quick, actually. You know what I see happen all the time, guys, and this is, I'm really glad, and I hope you guys work and get this stuff set up, because as an underwriter, we look at your financials. So we're going to have you fill out a form that's your personal financial statement, and you're going to fill out this whole form before we can apply for an SBA loan. You're going to have to fill it out. Sorry, it's going to have to be done. But in that form, we're actually going to be able to see a lot about you. And one of them is life insurance. Ironically, I find this so common that I don't. One of the requirements to get an SBA loan is life insurance. That is
Really?
one of the.
That's a requirement? So you can be denied if you don't have life insurance.
Right. You can be denied. That's one of the requirements. And they'll have their own bank, and they'll have they'll recommend but you have to have someone that. So if you're going to get $1 million SBA loan, you're going to have $1 million in at least a term policy to cover it.
Right.
And it's my point to all this. I can't tell you how many times that I've seen 7 and 8 figure business owners, 7 and 8. So these are 10-figure plus people that I've seen. I mean, they're doing really well for themselves.
Yeah.
Who have a $30,000 term policy, or have an $80,000 term policy, or they have $500K term policy, and they're running a multi-million-dollar business. It's shocking, and I kind of tease them about it sometimes. Where I become friends with my clients, so they allow me to tease them a little bit. But I'm like, brother, you're doing $8 million a year. What are you doing with a $40,000 term policy?
Yeah.
They're like, I know, I'll get to it. I'm like, you got properties all over the place. You got wife and kids, and if you were gone today, and what would happen to your business? Oh, I know, I'll get to it. It blows my mind. This is very common.
That's scary, dude.
In place.
That's so scary. Evan, after this video, I'm going to send you a video I did recently that, if you're open to it, share it with your clients. They're like, I'll get to it, not a big deal. Just real quick. I was working with and clients become friends. You get to know them really well. And he's 50 years old. We were applying for an infinite banking policy. He was going to front load it, get high cash value because he wanted to use it for an investment. And unfortunately, 5 days before his medical exam, he almost had a heart attack. He had they found a 90% blockage in his artery. He was just walking in the park with his family, started feeling chest pain, couldn't, his shortness of breath, went to the ER, 90% blockage, almost killed him at 50 years old. Right. And I tell that story to just reiterate the importance of getting this stuff taken care of, because anything can happen at any time, guys. All right. We don't know when stuff like that is going to happen. So having at least insurability locked in and stuff, oh my God, it's just so important. And he is a high income earner. He makes a lot of money. He's the primary breadwinner in the family. If he had died in the park right there, what would have happened to his family? Right. And he did have some life insurance, but not nearly enough. But anyways, I'll send that to you afterwards, because man, it's just not something you can put off, especially if you're an 8 figure earner, man. There's really no excuse. All right. Yeah. Money is obviously not the problem. You just need to prioritize it. Right. So it happens a lot. And I've seen multiple stories of that all the time, man. And I don't know. I don't know why they haven't done it. And I have one guy that's going to do it. I connected him with another guy, and I'll connect with you next time. In fact, I don't know why I didn't. And, at this point, I'm going to connect them with you. But, this is definitely something that needs to happen. And it's kind of shocking. It happens a lot, man. Yeah, it is. So there's a couple of final things I want to finish up on. One thing that you mentioned that caught my attention was it sounds like one of the things that business owners can do, obviously with the help of someone like you and your company, is let's say their financials are good, but maybe they just don't have the right products, the financing products right now. And that's what's kind of screwing them up a little bit. And so it sounds like restructuring the different types of financing and lines of credit or whatever that they already have, maybe those are actually not best or right for your particular business and your situation. You might be able to restructure some of those, move some things around, consolidate some things, and eventually get something like an SBA loan. Is that a fair assessment? As part of the process right now, what that could really help is analyzing and just going over what do you currently have as far as capital goes right now, and is that actually best for your business right now? Yeah, great question. So that is very common, and so this is what I see happen a lot, where you go to the bank and you're like, hey, I want a line of credit. You only get 15K. You need 200K, man. 15K is that's payroll for 1 week for some people. Sure. That's payroll for 1 day for some people. Right. Or a month for some people. And so it's just not enough. And so what commonly I see is that the business owner goes to Wells Fargo and say, hey, I need money. And they say, no. I was like, dang it. I go to Chase Bank. Say, no, okay, dang, go to a different bank. So they're frustrated. They go to Google and they just type in lines of credit. And there's companies out there that spend so much money. I mean, you're looking at $50,000 a day in advertising just to have you click on their website. So you click on their website, you get approved for a line of credit for $100,000. You're excited. You're like, oh, the interest rate's only 2% or even 4%. You're like, wow, that's great. But what this common thing that happens to business owners is they don't realize that that's annual interest rates. If you take 4% times 12, that gives you your true annualized interest rate, what you're paying, and then you're paying over 40% interest rate for this line of credit. Really? And you're like, shoot, I didn't realize that it was that expensive. And so what I do is I typically, when I get a client like that, that's super easy to refinance. And so I just take that 200K line of credit and get him, maybe I don't get him 10%, but I can still get him 15 or 20%. That's less than half of what they're already paying. Sure. Just kind of like a Band-Aid for now, just to help them. Okay, we have the line of credit, we refinance into another line of credit, we close the other one down. And then now that our cash flow is better, immediately you're saving a lot more money that way. Let's see if we can get you another product like a term loan that can maybe go in hand with this. Right. But while we wait for the SBA, because the SBA is going to look at a couple of things, is your debt service coverage ratio. This is a formula to look at. Basically, they want to make sure that you can service your debt. Sure. And I see a lot of times that the calculation is 1.25%. If you're under 1.25%, which meaning for every dollar you borrow, you have 25% in extra income.
you're actually profitable by a 25% margin there that you can cover those expenses. And so they want to see that you're there. I see a lot of business owners in the 0.8, 0.9, or even just 1, where they're just like barely above water, right underwater, which a lot of business owners do that because one month you might get a lot and then the other one you don't get, and you're kind of saving money. You're kind of getting through every single month.
Right.
But we really need to adjust your what you're paying on your other debts, and that's why I'll get you into another debt that's better for you while we get you into an SBA loan. And also, most importantly, is once you're working with me, we'll create a really solid business plan for you. If you're getting more money, more than like 500K, let's say, we'll create some really good business plans for you. And I have some really good resources for that, where we can actually structure it to, we really have to sell you to these lenders. And once we put this all together, we can sell you, then we can refi everything out anyways into an SBA loan. And then that's kind of how I've done the dance with every single person I've talked to.
Gotcha.
Is refi into something else, then create like a really good model for you, sell you, and then get you a better product. And then at that point, we're pretty much done.
Gotcha. I didn't know that about lines of credit with regards to that interest rate. That's a little misleading.
Totally misleading. Yeah.
It comes down to, again, knowing how these products actually work, doing your research on this, guys, working with experts like, Evan to help you navigate the waters here. Like, because here's the thing is, business owners, I'm a business owner. You're a business owner. Like, we can't be experts at everything, right? We do need to, I think we do need to know some basic facts about what we're getting into. We need to understand it, maybe be able to explain it to somebody else a little bit, not like what an expert would do, but the combination there of having, like real experts doing the right thing, actually helping people in their business right now, combined with knowing what your options are. Otherwise, if you think you're paying 2%, but it actually ends up being 40%, that's going to have a pretty nasty impact on your business. So you have to be aware of that stuff. And yeah, so if you guys are experiencing that, reach out to Evan, get those things taken care of. Like, think about, like, if you're paying, using your example, Evan, if someone's paying 40% on their line of credit right now and you get them down to 15, 20%, what does that do to cash flow? Like, it's all these little things can really, that can really, really add up. And obviously help with, maybe an SBA loan as well, kind of selling you on the SBA stuff there.
Absolutely.
Last thing I wanted to ask about lines of credit. Are you seeing right now with current conditions, like are banks and lenders lowering people's line of credits? Are they able to do that contractually? And are you seeing them pull back on people's line of credit? So like if they have a $400,000 line of credit today, maybe tomorrow they have $250,000 or something like that.
That's a great question. So I'm not really seeing that happen a lot on like the actual business lines of credit that are tied to your business credit score. Where I am seeing that happen the most is credit cards. And this is where a lot of people have a $20,000 credit card through Chase. They have, $20,000, $25,000 credit card, someone else, Discover. And they're using these credit cards on a regular basis. And there's a massive credit crunch right now happening where a lot of I'm seeing this also really heavily in HELOCs, home equity lines of credit. And this has been really tough for a lot of business owners who are like, oh yeah. And I actually said this in my Facebook, I think like a year or two ago. I said, the rates are great. You can get a HELOC. It's awesome. You got 30 grand, 50 grand, 200 grand in HELOC or a credit card. And now all the lenders are turning them into term loans. They're gutting the amount that you got as a line and cutting in half or completely getting rid of it. And it's been really difficult for a lot of business owners. A lot of that 0% is going away. Now they're paying 24%, 29%. And I get calls almost every week, like, Evan, can you refinance into something else? And the problem that I'm seeing is that by the time they get to me, unfortunately, they've already used so much of their cash reserves to pay down these other debts that were higher rates.
Right.
That they don't qualify for a lot of the products that I am pretty flexible. I have a lot of wonderful products that make me way broader than a bank does, but I'm also limited. If you come to me with $2,000 in your bank account,
Sure.
or less, it's really difficult for me to do something. And so I am seeing that a lot is credit crunches. And I always say this, especially right now, the time we're in May on this recording, guys. If you're like, let's say you're a landscaper, you're a construction, your peak seasons are the summer. Apply for funding during your peak seasons. I always punch at my clients when they apply last December. In January, I'm like, dude, don't apply in your worst months. I'm not even going to help you because you're going to get 5% of what we could have gotten during your peak season. And so that is definitely a strategy.
So timing is key too.
Timing is super key when it comes to applying. Let's say that you went negative on accident. Maybe, you got one. We look at non-sufficient funds. So I use a software that can track basically inconsistencies and if you had any negative days. And so I will recommend like, hey, well, let's apply later. Like, I know that the pressure is on right now, but I'll give you an example. I have a chiropractor that applied for funding and waited, and they only got a $3,000 line of credit offer. I'm like, we're not going to even give you that. And I only did that just to entertain them because they pushed me so hard. I was like, I told you, if you would have applied in your peak season when it was better for you, we would have got you 20, 30, 40 grand. And now you got a $3,000 offer. It actually happened this morning.
Wow.
And it's not good. And so I would definitely recommend to have a conversation with people that know what they're doing and understand that there's timing and everything, but also there's also great products that are not lending like what you're offering too. Like, I mean, if you can do something that, if you could put at least a little bit of your bucket into something else that, you can tap into your insurance. I mean, there's really great products out there that can help you. So anyways, just to kind of, I'm just thinking, I like what you do here. And so, yeah, the market's weird, man. It's really weird, but it's also just to kind of say on a positive note, because there is a lot of beating in the economy happening right now, and I can foresee it getting worse. I'm
sorry, Evan, you were breaking up. There's a lot of what in the economy?
Beating up.
Oh, okay.
In the economy right now. But what I am seeing is there's also a lot of growth too, with a lot of different industries, and so I am seeing larger. So us in the alternative lending space, we saved the economy in 2008, 2009. This economy was literally saved by us alternative lending boys. I mean, that's the truth. We were the ones that saved it, and we are here again to save it. We have great products, and right now, we're still offering large lines of credit and working capital and SBA loans. It's still lending, even with lenders shutting down, because we have so many access to products and I have a marketplace too, so I can literally position my clients in a marketplace and get the best offers that realistically qualify. So there's a lot of offers happening. We closed, I think in the last 2 months, we've done probably like just in lines of credit, probably close to $3 million in lines of credit. That's not including equipment and other products in SBA. But yeah, we have a lot of approvals happening all the time. So
yeah, that's awesome. And just comes down to working with the right people, having your business in order, having your financials in order, making sure that you're applying at the right time. You got the right products or consolidating products that maybe do not benefit the application process, the process of getting funding, additional capital, right? You just have to have your ducks in order, your ducks in line, whatever it is.
Yeah.
Yeah, that's awesome.
Get
stuff,
a bookkeeper, man. Get a bookkeeper.
Yeah.
The guys, like that's like the clients that I'll give one last example. I had this electrician, two electricians that each one got $300K, one got $100K in a line of credit in the last just recently. The reason why we were able to get it done so fast is they had a good bookkeeper. Literally, they just like talked to my bookkeeper, and I was like, "Hey, this is what I need." The bookkeeper had all their ducks in a row. That when we applied, like we got them funded within like 24 hours.
Nice.
And they were able to use that money for both different companies, but they both use it for payroll.
Right.
And so, like, man, I love bookkeepers. So if you have any bookkeeping clients or partners that you work with, get yourself a really good bookkeepers. Well, I love them. They always really help us with lending. It is, in my opinion.
Definitely worth the cost. So Last thing that I want to ask you, Evan, and we'll wrap up. I'm going to kind of give my synopsis here for the next 12 to 18 months, and I want to hear what you have. Like, what are your thoughts on, like, what do you expect the next 12 to 18 months to look like? How business owners should respond, adapt, and prepare for it? I personally think it's going to get worse before it gets better. I just did a post on Republic First Bank, the first major bank failure of 2024. Hopefully that's the only one. I don't think it will be. With the emergency bank lending emergency program, whatever that the Fed had for the year, with that expiring, now banks have to pay that money back. They're still sitting on massive unrealized losses because of the bond market. Because interest rates have been significantly raised very, very quickly. They're sitting on these massive unrealized losses. So I think we're going to see a lot of turmoil in the banking system. Which is another reason, like in the video I did the other day, the top 5 reasons to have a policy for business owners is safety and still continued liquidity. Because like if you have large amounts of capital just sitting in the bank goes under, okay, maybe you're covered by FDIC, maybe you're not, but also how long does it take for you to get access to your money again? Like there's just so much volatility, so much risk, and banks do not have a very good track record of being a safe place to store large amounts of capital. So definitely something to, again, consider just over the next 12 to 18 months. Are we going to see more bank failures? I think we are. I think it's going to get pretty nasty, especially with inflation sticky at 3.5%. Interest rates are not coming down anytime soon, I don't think. And I just, that puts a lot of strain on business. And like we got the commercial real estate markets, the implosion of that potentially, looming around the corner, recession. Like there's just so many things that there's so many black swan events, potential black swan events that can happen. And you have to assess like what is going to be the impact on my business if some of these things start to happen, and how am I prepared for it? Right. And that's why I'm such a huge advocate of these policies, because we get so many benefits. But I think for a business, having access to that liquidity, plus the money's compounding every single year, even when you use the money. All right. Having that death benefit, if you're a high figure earner, or is your family protected? And the interest rate right now, I'm paying 5.5% simple interest on my policy loans. I think that's pretty darn good in this market right now. So that's kind of my synopsis over the next 12 to 18 months. I think there's going to be a significant amount of volatility. There's still going to be a lot of uncertainty, and just making sure that we're putting things in place that help us prepare for that and kind of insulate us from that risk, reduce the risk of it impacting our business, I think is so important. So Evan, real quick, give me your synopsis. What do you think over the next 12 to 18 months? What do you think it's going to be like? What do you think business owners should do to respond and adapt?
I think you're right. I think what you're saying is exactly, I think there's going to be some volatility, and business owners should have different buckets that they invest into. I think it's absolutely crucial right now. I agree with you. I don't see interest rates going down. Even if they do go down, it's not, I can see the interest rates going down right before the election, just to say like, hey, this is the best economy ever. No. Right. And that, which is, again, not to get into political, I think it's BS that somebody can adjust interest rates just like that, just for political reasons, which 100% tells you a lot of things. Another thing as well is that over the next 12, 18 months, I think this election is going to tell us everything of where this economy is going to go. Our current administration is definitely not for small business owners. I can't see anything that they've done to take care of, and that's not political. I'm looking at as a loan officer. I don't see anything that has done to stimulate to help. This is even the previous administration, even during COVID, like that the things that were done then didn't help. We're now seeing a lot of things that are happening now, but the baton was just passed on and it's not getting better. So what does that mean? The next 12 to 18 months, I really think that you're going to have your financials in order. You really are going to, because in the future, if you really are wanting to keep this business that you have, whatever you're doing, running for years, to take care of yourself and your family and to have generational wealth, you're going to have multiple buckets. And, in 2008, when this happened the last time, when we had, and we're not in a recession, right? But we are. Banks are shutting down. I do see even more banks shutting down, alternative lenders too, shutting down like crazy over the next couple of years. And I just think that, man, you really got to get some good people working with you, and a good bookkeeper, and different diversity in what you invest into to kind of get through these next 5 years.
Yeah.
So on with that.
Cool. Awesome. I appreciate it. Yeah. It's to summarize all of that, the next couple of years is going to be very interesting. All right. So make sure you guys are paying attention, build your team, like Evan said, make sure you're working with really good people that know what they're doing, or actually helping people with these kinds of things. And, work on like making sure you have the best financing options in your business, whether that is an infinite banking policy and, an SBA loan. Like that's what I say about these policies is, like, you don't have to do either or. You don't have to do infinite banking or do an equipment financing loan. Do both. Like that's what it's designed to allow you to do, is to give you that flexibility. But having these things in place, having the team in place, I think is just going to be absolutely crucial over the next couple of years. So Evan, I can't thank you enough, man, for coming on. I think I learned like 4 or 5 different things with this conversation that I didn't know about SBA loans and lines of credit and stuff. You're just a wealth of knowledge, and I really appreciate it. And I look forward to having you on the channel again. Guys, I'm going to have links to all of Evan's information down below, to his website and everything. Evan, we'll put it up on screen here too. What's your website? In case people want to connect with you.
Yes, it's pretty easy. My website is Alta, AltaCommercialCapital.com. The best way to find me, though, is Facebook. Look me up, Evan Arancibia. I'm always posting stuff on there. That's where I probably post. Like, I'm on LinkedIn a little bit. LinkedIn is actually structured for one of the products that I do a lot of. But my personal Facebook page, I talk a lot about SBA, I talk about economy and things. So feel free to follow me on there. Shoot me a DM, and let's just talk on there.
Awesome. Sounds good. Well, again, really appreciate your time, brother. Look forward to having you on
too.
The channel again. Yeah, it's a great conversation. And wish you the best. Talk to you soon, guys. Make sure you check out all the links in the description. Have lots of really good resources and training there. And we'll talk to you in the next one. All right. Take care.